Hello folks, welcome back to the Investors Technical Corner. Did a video here a couple days ago on oil equities and oil prices in anticipation of the events of today. There's a few situations politically, in particular with regards to airstrikes that are taking place in the Middle East and Syria right now, and potential contagion into Iraq going forward with France and the United States. I should say today's date is November the 16th, 2015. And had a couple things to add. I did an earlier video again on Saturday, and I was right about a couple of items, but the situation has changed, and so I wanted to add a couple of details. The thing I was right about was that there would be, with these events taking place out of France, that there would be a short squeeze leading into the Monday trading session. I was a little behind on that. I anticipated that was going to occur when the markets opened. It actually occurred in the pre-market trading, where the prices advanced to they were closing in on $42 a barrel for WTI, and then they dropped immediately before open, and through the first hour or so it was trading, it was threatening the $40 range on the low end. So we had that short sell-off opportunity for longs to get some value out of their holdings, and then to repurchase after the short squeeze that cycle was completed, to repurchase again at lower prices. And so that worked out as anticipated. It wasn't too surprising to see that occur. However, I said in the video that I didn't anticipate that the run-up of the short squeeze would not be sustainable. It wasn't early. We've begun to make a move back towards it. As I speak, prices are in the 41.5 range. And the reason for that is information has been released detailing that oil infrastructure was a part of the initial military attacks, the airstrikes in Syria between the United States and France, and coalition. We imagine that a coalition effort will continue going forward worldwide against ISIS as they become more aggressive in taking their fight to foreign soil. As we've now seen, and we knew that ISIS was a threat, but we see now that they have become organized enough that they are a threat through foreign borders into democratic nations such as Paris, and of course threatening the United States, which is nothing new. So going forward, we would anticipate, that there's statements have been made that they're going after the finances of ISIS, and a lot of the direct financial capability of ISIS relies upon their holding territories in which oil production allows them to produce revenue. So we would anticipate a continuing military focus on those oil fields, and it will create something of a supply disruption that should ease up the supply overages, the supply glut that we're in right now. So that should help prices to certainly stabilize, not move below 40 a barrel. And I would anticipate, this range of $41 to $44 barrel for WTI range is probably what we're going to see over the midterm period or the next few weeks. And then again, with regards to last week's $4 to $6 million surplus increases, whether you take the API information or the EAI information with regards to the inventory adds that occurred last week, I think that was a matter. First of all, we are in a supply overage, which no one's surprised at, but in that supply overage, I think there was sort of an uncoordinated attempt by various international producers and suppliers to fill the gap that they anticipated would occur after the refinery maintenance season. We were getting low on refined product, and crude supplies are going to be needed in order to cover that. And I think sort of we had oil sent from all corners, and that resulted in what I think is going to amount to a one-off sort of oversupply into the U.S. market. Prices are largely based on U.S. market inventories, also developed country inventories. But over the next several weeks, I think we're going to see that drop off just naturally, because that sort of session, the refinery the refineries getting back into a production cycle and replacing their refined inventories that have dwindled during that season, that's going to, there's going to be a disincentive for additional supplies to be sent to the U.S. or for the U.S. to be a focus of those supplies. And then with some of the, the scenario in the Middle East, more supplies worldwide may be heading towards the Middle East, particularly Saudi and Russian. And so that, again, will reduce the surplus inventory adds that we're going to see in the U.S., which should help prices as well. And of course, as always, if you want real-time information, of course, these commodity markets, I stay pretty up to date, and but they move rather quickly. You can follow me on YouTube and certainly follow my blog as well, which is, we'll just put it on the screen below, www.gotaGametheory.com/blog. And it's page 2 on blog. I do a religious blog too, but what you're probably interested in is the investment blog. So once again, have a good day. Talk to you soon.